Hello, I'm Robin. I'm a certified financial planner, certified private wealth advisor, wealth manager by trade, and your rich auntie. So today I'm doing something a little new and different, and I want to draw your attention to something that is very important about this report. Now, this is the general explanations of the administration's fiscal year 2025 revenue proposals. Very dry title, but it has something that potentially has implications for hundreds of millions of Americans. So, without getting too much into politics into this channel, 2024 is an election year. And if Biden wins re-election and the Democrats sweep, this is their proposal for basically raising taxes on everyone. So I don't expect all Americans to rush out and go and grab this document. It's available for free on the internet. It was released in, I believe, March of this year. It's a little fanfare. It's 256 pages and written at a very high level, but it's of interest to accountants, financial advisors, some business law specialists, because it basically gives the proposal of what Biden would want to see done in his next term to raise tax revenue. And there's some really interesting things in this proposal around retirement accounts, specifically targeting the Roth. So we're going to talk about that today. Okay. So the Roth program, and to bring everybody up to speed on what Roth is basically a post-tax version of a traditional retirement account. So it allows a person to pay taxes on a contribution now, put that money into a Roth account, and all the growth on that money forevermore will be tax-free. I'm a huge fan of Roth. Many of my clients contribute to Roth. I contribute to Roth myself. If you're questioning whether Roth is right for you, I strongly suggest that you speak to an accountant or a financial advisor, because it is a rather nuanced answer whether Roth makes sense or not. But it's a very powerful tool for tens of millions, if not hundreds of millions of Americans in saving for retirement. There are some proposed changes in this plan that will happen as soon as 2025 to the Roth program. And if the Roth program is so beneficial and so good for so many Americans and so many Americans' retirement, why is the government changing it? I actually have known for the past 5 to 7 years that the Roth program was living on borrowed time. And I can tell you exactly why. So Roth program is good for many Americans' retirement savings, but it's also a very powerful instrument for the wealthy and the very wealthy to transition assets to the next generation. And I think the government knew this on some level and knew that wealthy people were doing some pretty creative things with Roth that were outside of retirement planning. And I think they looked the other way for a very long time. The Roth IRA program was implemented in 1998. The Roth 401k program was implemented in 2001. So we've had a good 20 plus year run with the Roth program, but now the government is finally putting its foot down on some of the more egregious activities that repurpose the Roth retirement accounts for basically passing assets to the next generation and circumnavigating our tax system. So if you do decide to read this document, I'm going to draw your attention to page 99 in the PDF. And this is where they start talking about retirement accounts and specifically the Roth. And one of the first proposals of the Biden administration is, who is designated high income? High income in the Biden's administration is a single person earning more than $400,000 a year, a married couple earning more than $450,000 a year, head of household is 425, and that is modified adjusted gross income. So when I say high income, that's who I'm referring to. So I have mixed thoughts about that. That is certainly high income for 99% of Americans. Here in San Francisco, a couple earning $450,000, especially if they have a kid or two, maybe middle class, and any other part of the country. But it's a wacky definition here in the Bay Area, but I certainly understand in terms of United States of America why Biden takes this definition of high income. So first things first, the Roth, typically most people, when they think of a Roth IRA or 401k, they think of contributions. The contribution limit for 2024 is 23,000 to the 401k version of the Roth, and it's 7,000 to the IRA version of the Roth. I have encountered people who have Roth balances of 10 million or more. Yeah, 20 million, 30 million in a Roth account. Now, you don't get a $20 million balance in a Roth account from contributions. There's some sleight of hand that happened there. I wouldn't say it's common at all. It's highly uncommon, but there are people out there walking around with millions or even billions of dollars in a Roth that, because it's in the proper designated account, it's outside of the long arm of the IRS, and the IRS can technically never tax it. So I won't explain how you can end up with a $20 million Roth IRA balance. It's its own video. It's maybe a 20-minute video. If you're curious how it's done, look up Peter Thiel, look up PayPal, Roth IRA, the $5 billion IRA, and I'll explain how you can end up with a multi-million or even multi-billion dollar Roth balance. This first rule that the Biden administration is targeting is actually targeting those folk who have an account balance of 10 million or more. And if you have an account balance in a Roth account of 10 million or more, that's obviously not being used for retirement. You have ulterior motives for that. And that's essentially what the Biden administration is saying. I won't go too far into this first provision because I don't think it applies to 99.99% of my audience. But in case you want to read it and understand it, it's on page 99 and you can go over it yourself. Where it really gets interesting and where I think it is much more broadly applicable is number 2, limit rollovers and conversions to designated Roth retirement accounts into Roth IRAs. And it's page 92 in the provision, but page 100 in the PDF. You can go and read this yourself. I won't read it to you word by word because it is at a very high level and it can be a bit verbose and difficult to understand. But essentially, this is saying if you are a high income taxpayer, and remember I gave the definition of high income taxpayer earlier, 400,000 for a single person. This is basically going to say you cannot roll money from a traditional account into a Roth account. So you cannot move money from a traditional IRA to a Roth IRA. You cannot move money from a traditional 401k, 403b, 457, whatever, to a Roth version of that account if you're single and earning more than $400,000 a year. Now, personally, I saw this coming. I knew this was coming for years, that there were going to be limitations put on the Roth because I saw what was happening to the Roth program. It was being used for intentions outside of retirement. I think 400,000 is the first pass of this. I think this is just the first pass. I think they're going to come down on what they consider high income in the future. So if you're earning under 400,000, you still have an opportunity to do this. And remember that 400,000 is your income plus the conversion amount. So if you earn $350,000 a year and you convert 100,000, you're over. If you earn 350,000 a year and you convert 40,000, you're good. So you have to add whatever amount you are converting from the traditional account to the Roth account to your income to stay under that 400,000 threshold. Now, one thing that wealthy people love is their loopholes, right? And there are loopholes around this. For example, I have clients who are big earners. They work as professionals, they're lawyers, they're doctors, they work in finance, they work in engineering. They earn hundreds of thousands of dollars a year. And they're by anyone's definition, they're a high income earner. Then something happens in life. It could be a health issue, a family issue. It could be that they're laid off, could be sabbatical, any multitude of things happen. And I'll use the specific case of a doctor who got long COVID and who was out of work for a long period of time recovering, went on disability, and who is getting ready to go back to work at the very end of this year. So this is a person who typically earns 750,000 to over $1 million plus with bonuses each and every year. In the past 2 years, he's earned next to nothing because he's lived on disability and savings. What I would do in a client who was constantly over the $400,000 rollover limit, I would wait for a life event in the client's life, like this doctor. And while he is recovering from COVID, I would say, hey, it's really terrible that you got long COVID. Wish you all the best. This is an opportunity to do a rollover from the traditional account to the Roth account. And I have a few clients who are currently in that situation who I'm watching right now, and I'm working with their accountant to see, how we could feng shui money from the traditional account to Roth account in a very low tax year. It also is to your benefit to wait until there is a dip in the market. And I've had that situation. I did a lot of conversions during leading up to COVID when the market really went down sharply. It's a perfect opportunity to do some conversions. So essentially, someone who is a high income earner typically isn't a high income earner their entire career. There are years where things just don't work out and you may not be earning what you are used to earning, or some people's incomes are erratic. They're high income earners for 5 years. They have 2 years of low income and then they're back up in very high income. And a lot of people bounce around, and you can use that to basically get around a loophole to do conversions during those low income years of your life. So, anytime you create a new rule, wealthy people are going to find loopholes. That's one particular loophole to get around the high income earner designation of the Biden administration. Also, in your 60s, after you stop working, but before you start drawing on your Social Security, for example, let's say I stop working at 67. I have adequate savings. I don't really need anything. I'm not going to start drawing my Social Security until full retirement age, which is 70 or 73 or whatever it is when I retire. I can take those years between 67 and 73 and use them to do Roth conversions. So there's a lot of ways that you can get around this. I think if your true intention is to use this for retirement, personally, I think the Biden administration or whatever administration is next is going to come back and put a cap. They're capping it at 10 million with the first provision. I think they're going to put an additional cap and bring that down probably to 1 or 2 million to limit people's lifetime contributions to the Roth program to prevent people from abusing the Roth program and using it for generational wealth instead of for retirement. The second thing that I notice about this, and this is really unfortunate because I love this provision. This paragraph here, and you'll have to go back and read this yourself. Basically, this sentence here puts an end to the backdoor Roth for everyone, irrespective of income. Now, the government has known about backdoor Roths and just kind of looked the other way. Backdoor Roths do not benefit the poor or middle income earners. I've only done backdoor Roths on people with incomes of at least 150,000. So it's high middle to high income folks who take advantage of this. But basically, it's a maneuver where you can put an extra $7,000 for 2024, if you're under the age of 50, into a Roth IRA account. And the government just kind of looked the other way to this program. They knew people were doing it. Well, finally, they are putting their foot down, and they're with this sentence, this basically brings an end to the backdoor Roth. Darn. This is a proposal. They may come out with something completely different, or this provision may not pass. But as it appears, the Biden administration is attempting to close the door on backdoor Roths. Now, one question I have about this is after-tax account. Some people in some places of work have something called an after-tax account, and it's basically a non-retirement account where you can put away a certain amount of money a year, maybe $10,000 or $25,000 or however many thousands of dollars a year. And at the end of the year, at some point in the year or at several points in the year, you roll that into a Roth IRA account. And some people can really get their Roth IRA balances really up there by doing this maneuver. I work for a company where you could do up to $10,000 a year, and everyone took advantage of it and, shoveled money in to a backdoor Roth. They put in their 7,000 a year, but then they also put in an additional $10,000 a year through the after-tax account. I'm wondering if this means the end of the after-tax account too. Only certain companies have them. They're sometimes they're only available to certain employees in a company, so they're not widely available to all employees everywhere, but they are a very powerful tool for increasing Roth contributions. So I am really sad about that provision of the backdoor Roth and potentially after tax account ending. So someone can't have more than $10 million in a Roth IRA. Okay, I totally get that. And I actually agree with that assessment. There are some changes coming, and I've known these changes. This is just a first pass. This is not the final changes to the Roth program. I do believe the Roth program is going to get more restrictive as time goes on. Is the Roth program right for you? Talk to your accountant, talk to your financial advisor before you make that determination. But it can be a very powerful tool for some people in saving for retirement. So there you have it. What's on the plate for 2025 with the Biden administration should Biden win the 2024 election? Changes that he plans to make to Roth program and to Roth accounts. If you found this information useful, please like, please share, please subscribe. If you love the Roth program, please leave a comment and tell me why you love the Roth provision and what the Roth provision means for you and for your retirement. Thank you.